Good morning, everyone. Darius Dale here to present our macro minute for Monday, April 4th, 2022. Starting with markets, we have stocks up a little bit this morning, commodities up also a little bit, crypto down a little bit, dollar up, global bond yields mixed. Big movers this morning. It's not a ton of action to report. A lot of stuff trading sideways this morning, but what I thought was noteworthy was the European bond yields diverging from U.S. rates. That's pretty noteworthy. 10-year Bund, 10-year gilt yields out of UK and Germany down 7 basis points day over day, whereas you got 10-year Treasury yield, 30-year Treasury yields up, 1 to 3 basis points respectively. Big news this morning at Russian and Ukrainian negotiators are set to resume peace talks on Monday, and this is after the European Union joined the U.S. in condemning Russia for its war crimes, but in several Ukrainian towns, and saying that the bloc will act as a matter of urgency, quote, to work on additional sanctions against Moscow. We'll see if they have any real teeth. The Fed minutes later this week. We'll get those on Wednesday. ECB minutes on Thursday. We'll get some clues as to the pace and timing of interest rate hikes. Mary Daly, all but more or less guaranteed we're going to get a 50 basis point hike in May, barring some major catastrophe along the way. But we're also looking for key details on quantitative tightening as well in those minutes, and obviously in the May FOMC meeting. On the macro front, while Friday's March jobs report certainly garnered all the headlines, but the ISM manufacturing PMI data actually provided investors with more of a signal as it relates to the outlook for the U.S. and by extension, the global economies. Unpacking the data, you had headline ISM slow to 57.1. That's the lowest point we've seen since September 2020. New orders slowed to 53.8. That's the lowest point we've seen since May of 2020. Employment, which is obviously a lagging indicator, that ticked up to 56.3. That's the highest point we've seen since March of 2021. Prices continue to accelerate. 87.1. That's the highest point we've seen since June of 21. So a real impulse there, and that's what's underpinning our view that the Fed will be incrementally more hawkish the next time we hear from them from FOMC perspective. And then something we called out going back to November, percentage of respondents reporting slower supplier deliveries that ticked down to 34.8. That's the lowest rate we've seen since January. So ameliorating supply chain disruptions, but maybe not the good kind of amelioration, maybe the bad kind in terms of demand destruction. And so taking it to the chart this morning, what I'm showing here is ISM new orders up here in the blue line. The red line, yep, ISM up here in the blue line. The red line is the ISM inventories. And what I'm showing in the bottom panel here is the spread. And what you notice, taking this data all the way back as far as we can get it to 1948, every time you notice there's a negative print with a few exceptions in kind of mid 1950 or early 1950s. You had mid 1950s, mid 1960s, and then sort of kind of 2011, 2012. There haven't been a lot of exceptions of negative prints that didn't immediately lead into recession. Now, again, I think we're a little bit ways away from getting to a recession in the U.S. economy. I still believe that's a kind of a 1H23 event in terms of our ability to assess that from an economic standpoint. But certainly this negative 1.7 number, which is the lowest print we've seen since May of 2020, should raise some alarm bells incrementally as it relates to what the yield curve has been signaling to investors for a few months now. So definitely be aware of this. This is one of those stealth leading indicators from a business cycle perspective that allows you to make some of these big macro pivots from an asset allocation standpoint. And hopefully you're appreciating that we're delivering them to you for free in this morning on the macro minute. With respect to today's probable range setups, S&P 500, that is neutral VAMs minus 4.5% of downside versus 1.8% of upside in its probable range. WTI neutral VAMs as well, minus 8% of downside versus 19% of upside in its probable range. Bloomberg Dollar Index still bullish from the perspective of our volatility adjusted momentum signal. That's got 0.5% of downside versus 1.5% of upside in its range. 10-year Treasury yield bullish VAMs minus 18 basis points of downside versus 25 basis points of upside in its range. Bitcoin still bullish VAMs minus 6% of downside versus 9% of upside in its probable range. Ethereum still bullish VAMs as well, minus 10% of downside versus 6% of upside in its probable range. And then fair fighting gold, neutral VAMs with 3% of downside versus 3% of upside in its range. So with that, Darius Dale presenting our macro minute for Monday, April 4th, 2022. Best of luck out there today. And we'll have our macro scouting report, our April macro scouting report out tomorrow. So I'm excited about that. 100 plus slides of all the content you need right to your inbox to help you sort of risk manage the medium to longer term macro pivot macro cycle. So thank you for tuning into that in advance. Cheers.